Creamer Media's Mining Weekly is speaking to Mark Gilbert, the head of advisory at NSDV, an integrated law and professional consultancy that specializes in base industries such as mining and the environment. Mark, the upcoming National Environmental Management Amendment Bill, the so-called NEMLA 4, appears to be a legal framework that could potentially make South Africa more attractive to mining investors. You know, at the Investing in African Mining in Durban, President Cyril Ramaphosa described as, quote, a matter of grave concern, South Africa's descent into the bottom 10 of the Fraser Institute's Investment Attractiveness Index, our worst ever ranking. President Ramaphosa also mentioned the exploration strategy plan to move to future-centric metals like copper, nickel, cobalt, rare earths.
The mantra one has heard in industry is regulatory certainty, regulatory certainty, regulatory certainty, you know, all of that. We don't believe the law is the problem. It's the application of the law, and in many cases, a deficiency of skills and capital in the regulators. And our proposal has been simply, you know, if one were to implement a deeming provision, that brings your regulatory certainty immediately. You don't need to change any legislation. The rules of the game are now clear. If you submit a compliant application, the regulator has got 120 days to respond. If they do not respond, your license is granted. Bang, done. That would bring an enormous amount of capital in. Why? People underestimate how valuable our mineral endowment is. There is so much gold still to be mined in South Africa: PGMs, chrome, nickel, zinc, rare earths. We have, as you will know, Steenkampskraal, the highest grade rare earth mine in the world. There are 5 high quality rare earth deposits sitting here in South Africa. We have got lithium deposits here in South Africa. What prohibits people from investing is these timeline uncertainties, not a lack of appetite. So, you know, we can propose a complete rewrite of the legislation, which will take an inordinate period of time. We think we are going into a commodity super cycle at the moment, and that started, you know, probably 6 or 8 months ago. It will be volatile, but we have seen, you know, if you saw the platinum miners last year, you know, announcing profits up 200, 300, 400%, you know, just absolutely spectacular numbers. The gold companies, South African gold companies, you know, printing money. So our mines are highly profitable. The environment is good. The detraction of the South African market is the uncertainty around timelines to get all of these approvals. So, you know, one can say, well, we should rewrite all the rules and there should be exemptions for junior miners and, you know, et cetera, et cetera. Our argument is different. Let's place an onus on the regulator to perform. I don't think it's an unreasonable request. It's a simple amendment to the legislation. Now, the immediate response we get, well, you know, what if the application is not compliant? Well, A, you have that problem right now. Okay, so it can be rejected. All you're doing is truncating timelines. And if the government were to miss the timeline and it be granted, there's nothing that stops anyone taking it on review. The law is very clear. You must be compliant. Okay, so we don't lose any control over the level of compliance with what we're doing. What we do, though, is we bring absolute certainty to timelines. And it's a message we're going to start pushing out. We think it's the first practical solution that actually solves the critical challenge. Our laws work, our courts work. They really do. The appeal processes work. They may be cumbersome at times and frustrating, but if we were to have an absolute deeming provision, suddenly the onus is now on government to perform, just to do their job. That's all we're asking them to do. You will bring absolute clarity. And if mining companies submit compliant applications, they know within 120 days or whatever the time period is, they can start mining. That would unlock the vast exploration potential. And when I say it's vast, as a country, we probably have some of the best exploration data on our, on our country in the world. We had massive mining companies here for hundreds of years. During apartheid, there was trapped capital, and a lot of that capital was poured into exploration. This entire country has been flown at 100-meter aeromag on a 100-meter grid. This entire country. That data sits here in South Africa. I don't think there is a significant mineral deposit that is actually not known in South Africa. There may be additional work that's required. Let's go to the Priska deposit, a well-known deposit, mine plan done, BFS done, So it's a high-quality copper project sitting here in South Africa. You go to Steenkampskraal and the Great Western Minerals, they spent nearly 400 million rand on exploration and drilling. The quality of data is spectacular. So that's not the problem. The problem is unlocking the capital. And the capital, I agree with people, want certainty, but I think we're looking at it the wrong way. It's not certainty of legislation, it's certainty of performance. And that's a relatively easy thing to fix. And a compliant application, I know in 100 days, if they don't respond, I get my license. That's pretty attractive. I'm like, okay, that sounds really good. So yes, we have a vast mineral endowment. It's one of the great frustrations for me as an economist. We missed the boom in 2008. Post-crises, one tends to get huge uplifts in real assets, commodities in particular. We're one of the most mineral-rich countries on the planet, and we risk missing it again simply due to delays.
That was Creamer Media's Mining Weekly, speaking to Mark Gilbert, the head of advisory at NSDV, an integrated law and professional consultancy that specializes in base industries, including industries such as mining and the environment.